I'm Matt Bishar with NAREIT's REIT.com here in Reston, Virginia for the 2015 Leader in the Light Working Forum. Joining me today is Joshua Kagan, Senior Fellow with the Carbon War Room and Director of Business Development at Clean Fund. Joshua, thanks so much for joining us.
Thank you, Matt. It's great to be here.
Can you start by telling us about Carbon War Room's mission and how it applies to the REIT industry?
Absolutely. Carbon War Room is an entrepreneurial nonprofit started by Richard Branson to use market-based forces to tackle climate change. We seek to use business solutions to accelerate low-carbon solutions at the gigaton scale. If you think about our carbon problem, buildings account for around a third of global carbon emissions. Commercial buildings are 40% of that. And the REITs, there's roughly 500 REITs that own 20% of the world's commercial building stock. So the Carbon War Room seeks to pull levers that could have massive impact somewhat quickly. And so the REITs, given the concentration of ownership and the power and the breadth of the ownership, it's a ripe area for us to see if we can have an effect on.
And how would you sum up where energy efficiency stands for commercial real estate buildings today broadly, and what's been the biggest impediment to seeing greater progress?
It's a great question. I think commercial building owners get the value proposition of energy efficiency. I really do. The challenge is even building owners who have a lot of capital, there's internal competition for that capital. Efficiency competes with other projects with perhaps higher hurdle rates, et cetera. So I think building owners understand the value proposition. That's where I get really excited about things like PACE and third-party finance that enable building owners to finance 100% of the costs of an energy efficiency project that's amortized over 20 years that can cash flow from day one.
And what is the significance of your REIT study compared to others that have been done in this area?
So historical studies have looked at the greenness of real estate on an asset-by-asset basis. So looking at how a LEED silver building in a certain market has higher rents and occupancy and transaction prices. Our study is one of the first to look at how REITs that embrace sustainability, the relationship between that and financial metrics like return on assets and return on equity at a portfolio level.
And what were some of the results that came out of that?
We found that for each percentage increase in a REIT's GRESB score, it corresponded to a 1.3% increase in return on assets and almost 3.5% increase in return on equity.
And looking longer term, what are some reasonable and attainable goals in terms of energy efficiency gains that can be made in the industry, say in the next 5 to 10 years?
I think that we're going to see a lot more benchmarking occur. There's the old adage in management consulting that you can't manage what you don't measure. So I think, mass disclosure and benchmarking that leads to more projects occurring through, third-party mechanisms like PACE, et cetera. So I wouldn't be surprised if billions and billions of transactions in energy efficiency occur in the coming years.
Great. Joshua, thank you so much for your insights.
Great to be here. Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.